Hey, this is Matt from InvestiQuant. Today is Monday, July 19, 2021. This morning, the markets opened down sizably, and we have been fairly weak since then. We've got the S&P in this upper left-hand chart here. You can see we gapped down well below Friday's closing price, well below Friday's low. From there, we kind of consolidated for just a handful of minutes early on, 15, 20 minutes or so, and then we broke down lower, and we have continued lower as we approach the close of the session today. And what we're going to be looking at this afternoon is what has happened historically when you get this weak type of price action to start the week off on Monday. So let me go ahead and set it up and discover using all four instruments. We're going to be using a time-based entry based upon entering the market long at 3 p.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now this morning we gapped down, and I'm going to add that to the test. I'm going to use gap down here from gap direction just to keep more samples. I'm just going to keep it gap down as opposed to gap down below prior day low or anything more specific than that. And then next, I'm going to go into the post-open filters, and I'm going to describe some of the action that we've seen so far. And some of the key characteristics that stand out to me is we opened near the highs of the day. So I'm going to say that the open is in the top 25% of the intraday range. I'm going to hit equals right there. And then I'm going to say that the 3 p.m. price is in the bottom half of the intraday range. We're trading near the lows right now, but I have no idea where we're going to be at 3 p.m. So I'm not going to be quite so specific about that. I'm just going to say it's trading in the bottom portion of the range. So I'm going to hit equals next to close in bottom half of the intraday range, and that'll conclude the price action I'm going to use from the post-open filters. Next, I'm going to go into the indicator section. I'm going to put us in a similar market environment. So we're coming off the highs here. We're now below a 10-day simple moving average, but we're still above the 200-day simple moving average. So I've added both of those to put us kind of in a weak bull market. And then lastly, in the calendar library, I'm going to say this is taking place on the first day of the week. So I'm going to hit equals here next to Monday. That concludes all of the information that I wanted to study. Now I can click view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. When you gap down on a Monday in a weak bull market and then sell off from the open and are trading in the bottom half of the intraday range at 3 p.m. Eastern Time. Historically, we've got 19 samples of the S&P with this pattern taking place dating back to 2003. For the NASDAQ, there are 27 samples. There's 26 in the Dow and 27 in the Russell. If we look at the win rates on them, 3 of the 4 are favored. We've got the S&P coming in at 63% of these have closed above that 3 p.m. price. For the NASDAQ, it is 70%, Dow is 69%, and Russell is the only one that is not strong at 41%. And then the average win to average loss on this has also favored the upside on 3 of the 4 instruments. So the S&P has larger average wins compared to their losses, as does the NASDAQ and the Dow. The Russell, the only one with the weak win rate, also has a larger average loss. So historically speaking, this pattern has been a little bit more favorable towards the bulls as we approach the close in 3 of the 4 instruments. Hopefully you found that helpful. Good luck today, and we will see you next time.